About that all day yesterday. This is Bloomberg Markets, the open, just seconds away from the opening bell. We are seeing the Nasdaq give up some of the gains that we saw from earlier, up now 1.4% after being up as much as 1.8%. Russell 2000 up 1%. The S&P lagging behind. What you're seeing in the yield space is basically yields going down and price going up as you talk about core inflation not rising as much as people had expected. The dollar also maintaining its strength. The euro down 108.77. And crude rebounding after yesterday's decline, up 5% to $99 traded on the NYMEX. A lot of this has to do with that CPI report. I do want to just bring to you, we are getting some developing news coming out of a Brooklyn subway station where we're hearing reports of either some sort of explosion or a series of explosions or some sort of shooting. There are multiple people being injured. The FDNY says that there are several undetonated devices at the Brooklyn location. We will bring more to you as we get it. The details are fuzzy right now. Joining us now with a look at the stocks moving at the opening bell, here's Abigail Doolittle. Abigail.
Well, Lisa, there's finally some relief for the tech trade, which has been under tremendous pressure recently with rising rates. Now that rates are lower on that CPI print, tech is bouncing back. Chips, in addition, had been especially under pressure, down more than 15% recently. Today, we have NVIDIA, one of the big chip names, up sharply, off of its pre-market highs, but nonetheless up 1.7%. Microsoft also getting a bid, up about 1%. Tesla, a little bit of consumer and technology, up 2.2%. And then finally rounding it out, not technology, but retail, Kohl's up 5.5%. This as Franchise Group has joined the bidding with a $9 billion offer, $69 per share, less than Hudson Bay, but investors are taking it seriously. Kohl's at $60 per share, Lisa.
Abigail, just quickly here, how much are you surprised, are you hearing surprise from analysts about the pop in big tech, as so many people yesterday were talking about a rotation out, and you've seen the Nasdaq underperform the S&P by twice, down 14% versus the 7% decline in the S&P.
Well, you know, Lisa, it's interesting because tech has been under so much pressure, and I think some expectation there is that you would continue to see yields go higher. And of course, there's been so much about the downtrend in yields over the last 40 years, marking the great bond bull market. But with yields coming in just a little bit today, it suggests that that bull market is still in play, perhaps meaning that you'll see yields coming in, which could give more relief to technology as valuation is under less pressure. Perhaps. We'll see. This changes day by day, it seems. But right now, it seems as though we may be looking at some sort of a whipsaw to the upside.
Abigail, thank you so much. Going back to that story that we were just talking about, the NYPD now confirming that multiple people were shot inside a Sunset Park, Brooklyn subway station this morning. Bloomberg's New York Bureau Chief Shelley Banjo joining us now. Shelley, what do we know?
Not a lot at the moment. So this just happened. The fire department and the NYPD is advising people to get out of the area and move away. They've confirmed that shots were fired in the FDNY. The fire department of New York has said that they have also seen smoke coming out of this subway station. So the issue is they're trying to figure out, is this some sort of detonation of something, or is this shooting, gun shootings of people? So that's what they're trying to figure out now.
Shelley, before we let you go and get some more details, how much are we seeing this as part of a pattern, particularly as crime increases? This has been a massive issue for the city, albeit still way below where we were back in the 90s. How much is this sort of edifying some of the concerns?
Well, crime in general is down at decades lows. Violent crime is actually up, and it's something that started during the pandemic and has continued over the last 2 years and through the inauguration of the new mayor, Mayor Adams, who kind of rose and came to office on this promise of fighting crime. And so this is continuing to be a front and center issue for people in this city, both on transit, violent crime, shootings in the street, daytime shootings, hate crimes, things that are really visible. So while other kinds of crimes may be lower, things that are very high profile, visible, throwing someone in front of a train, shooting someone in broad daylight, those are the types of things that, while the numbers may be lower, they get a lot of attention. They get a lot of headlines, and they make people scared.
Yeah, I can imagine. Shelley Banjo, we'll let you go get more details on this developing story. Thank you so much for being with us. And I do want to say for anyone who's commuting that there is no DN or R service in Brooklyn and some stations in Manhattan. This according to the MTA right now. So some major subway lines have been stopped as emergency staff deal with what's going on at the Sunset Park Brooklyn subway station. We do want to turn back to markets where it really has been driven by inflation, which frankly is underpinning a lot of stories that really do dovetail into some of the concerns that people have, especially globally when you see social unrest in many countries. Dan Suzuki is talking about how this is going to affect the tech sectors, warning that there is a tech bubble ready to burst. Take a listen.
Tech broadly, we think is still in the midst of a bubble. And I think that bubble, still has a lot further to go before it ceases to be a bubble. You think about the backdrop. This is not the right backdrop to be owning these types of stocks. Typically, when the bubbles collapse, they overshoot. What's a typical bubble down? It's not down the traditional 20, 30%. It's usually a lot more than that.
Still with us patiently through all of the breaking news, Ella Hoja, David Kelly, and Jerome Schneider. Thank you for being with us and your patience. Jerome, I want to start with you. Do you think that people have priced in throughout markets, and I know your specialty is in the short-term space, how high overnight rates may have to go in order to really curtail some of the inflationary pressure?
They really have forecasted a pretty aggressive Fed, and we've seen this as an evolving metric over the course of the past 6 months, where basically sell-side analysts, the markets, keep one-upping each other in terms of how aggressive the Fed actually has to be in nominal policy measures to actually tighten policy. They're probably going to continue until they actually see financial conditions markedly tighten, which we haven't yet necessarily seen yet. But the other side of the coin is what we've also talked about over the past week, which is bringing the balance sheet from the shadows into the spotlight. And this is an important metric because ultimately part of the debate is going to be not necessarily how high and how often the Fed has to increase rates, but to what extent does balance sheet and reducing the balance sheet help to create relief so that they don't actually have to be so aggressive on the balance sheet. There's going to be probably a debate in terms of how damaging higher rates eventually become to segments of the economy, to segments of the middle and lower classes. And that's probably going to be a debate for later this year and early into 2023. It doesn't necessarily paint rate cuts, but it does perhaps slow or perhaps create a bit of a debate and contemplation within Eccles building when the FOMC meetings come around. So the notion of where we sit here today in terms of front-end rates, specifically where we started earlier today at about 2.5 or 2.55% two-year note, although we've rallied, it still marks a pretty aggressive tenor in terms of where we're headed in terms of rates. And more importantly, and I think this is an interesting fact, is that when you extrapolate where the two-year rate is, it's really suggesting that the one-year rate in 1 year is above 3.2%. And that's a fairly aggressive number that is actually fairly attractive to invest in from a carry and yield and income perspective. And that probably resonates with investors looking for a little more safety at the front end of the yield curve right now.
David, given the sense that we have been so aggressive in pricing in what we might see from the Federal Reserve, do you think that big tech is a buy or a sell?
Well, I think we're going to need to look very carefully at valuations. There are cheap parts of tech and there are expensive parts of tech. And I think what we're going to go through here is a period, first of all, of obviously high inflation, rising interest rates this year, and then slowing growth next year. And slowing nominal GDP growth. And so I think there's going to be a lot of tests for a lot of assets here. So it's really a matter of valuation, stock by stock, security by security. There are some things that make sense and there's some things that make no sense. And I think everybody knows that. But I think that we're out of the days where you had very low rates, very strong growth, and you can get away with anything. I think valuations will be much more called into question in the next 2 years because we're going to have a bumpier macro environment here.
All right. Well, we've got more. Abigail Doolittle is back with us to look at some of the broader consensus views. Abby, what are you looking at?
Yes, indeed. Well, the Bank of America April Fund Manager Survey, key takeaways, lots of key takeaways to come from that monthly survey. So let's take a look at what they are. And one of the biggest, of course, is around the Fed and how many hikes are expected. The seven Fed hikes in 2022, that's consensus right now. One more around sentiment, global growth optimism at an all-time low. That's pretty ominous. Not surprisingly, then the biggest tail risk, global recession, the possibility of it, and then stagflation expectations. That stagflation word rearing its ugly head, the highest since August of 2008. So when we take this to the most crowded trades, not surprisingly, one of the biggest ones is short U.S. Treasuries, with the 10-year yield backing up 1.25 point this year in an extraordinary way. 10-year notes at 1 point, down the most on a yearly basis since 1999. But you also have the long oil commodities trade, with oil at 1 point soaring. Long tech is pretty interesting, Lisa, only because we have, of course, seen some more caution there. Long ESG, short China on the various issues related to China. One of the more recent ones beyond the regulation of technology being the lockdowns that are occurring in that country, again, against COVID-19. And then long Bitcoin. And then finally, in terms of the tail risks, well, we did mention one already. That, of course, is the risk of global recession. The other one, though, hawkish central banks. The idea that you could see central banks, the Fed in particular, become a little bit hawkish, which would, of course, send yields rising, tied into inflation, then, of course, global political problems, asset bubbles, COVID-19. Many, many issues, Lisa, as you can see, for investors to worry about this year.
Yeah, and frankly, the range of uncertainty, wide, wide, wide. Abigail, thank you so much. We've been talking about how this plays out in big tech, and Ella, I'd love your view, just weighing in on whether we perhaps are seeing some ideas of safety being represented in the tech sector, or whether this is a key area of risk with the rate and the rate uncertainty, I should add, not just necessarily rate hikes.
Well, so far tech has had a very positive correlation with interest rates, so yields, and it sounds like from the Bank of America fund manager survey that everybody seems to be bearish treasuries, and therefore that probably doesn't bode so well for the tech sector. Look, we've had quite a bit of repricing there, and I concur that it's very specific to certain names and the growth stories there, but it's really about the broad macro environment. That's really factor one that's driving a lot of this prices, and difficult to sort of take the other side to the Fed, but I think the arguments made earlier in terms of the value in the front end of the curve, that to us, is attractive here, given the carry-on role and given, how much more hawkish the Fed would need to become from here for you to lose money. So, I bring bonds here because that they are very important for this tech discussion. So, on the credit side for tech, there is some value and premium that's been built in. So we like owning that in dollar-denominated names. Very different story on the equity side. I don't think I'm very well equipped to talk about that. But broadly speaking, it's really what's your point on, how far yields can go from here. And we obviously have repriced a lot. Another thing to say on yield is typically when curves are so flat, going forward, things tend to look much better from a return perspective from bonds. Secondly, allocations to fixed income now are certainly on the lower side, seen ever since before the global financial crisis. And another important element on the asset allocation story is that pension funds now, in terms of funding rates, they're looking pretty good. It hasn't been as good since the year 2000. So you might get some of that allocation come to the fixed income side, and so on the tech story, perhaps that gives bonds some stability, and therefore tech can have a bit of a breather on the back of that.
Ella Hoja, David Kelly, and Jerome Schneider, thank you so much for being with us. We are looking at equities that are losing some steam as time goes on, but we really do want to go back to what we're seeing in Brooklyn at that Sunset Park station. Currently, the subway department, the MTA, is saying that there is no B, N, D, or R service in Brooklyn. We are seeing a live shot. We have, of course, Governor Hochul being briefed on this developing situation. Evidently, multiple people were injured. They are not sure whether this was also a shooting. The perpetrator, the suspected perpetrator, is still at large. The FDNY did say there are several undetonated devices that they are working on. We will bring you anything further that we get as we try to determine what happened and what the fallout will be. From New York, this is Bloomberg. This is Bloomberg Markets. The Open. Just want to bring you some breaking news. We're looking at live shots after multiple people were shot inside a Sunset Park, Brooklyn subway station this morning. We are hearing about undetonated devices found also in that station. The FDNY reporting that, and the MTA saying that no DN or R service currently is operating in Brooklyn. Right now, we have Bloomberg's Patricia Hurtado with some more details. Can you just describe to us, Patricia, the scene in Brooklyn right now?
Well, this area is a major transit hub for people going north and south in Brooklyn. It goes through most of Chinatown in New York City and through Manhattan and all the way into Brooklyn. There apparently is a chaotic situation. There were people evacuated from the subway station with smoke condition, as well as reports of people being shot. The latest reports are that 13 people were injured and 5 people were shot. And it's a possible potential undetonated bombs also located in the subway station.
So do we have a sense, Patricia, of who might be behind this, how widespread this is, or what the prognosis is of the individuals that were wounded?
Unclear of the situation of the people and how injured they are. There was chaos this morning with helicopters swooping overhead. Apparently, there was an indication of a preliminary information of a suspect who was wearing a construction vest and a gas mask, and people were evacuated out, and all transit and subway service has been suspended in that area.
Do we have a sense, Patricia, of how rare this is? Because there have been a lot of reports recently about increasing crime, and we were just hearing from Shelley Banjo about how if you look on a sort of historic level, it still is down significantly relative to the recent past. What about in subways? What type of security is there? What type of situation is it?
Well, there has been a situation in the past. The subway system in New York is particularly vulnerable to being targeted by terrorist threats. There was an incident at the Penn State, at the Port Authority bus terminal, but connected to the New York City subway station in 2017, where a guy who was inspired by ISIS set off a bomb, and he was sentenced to life in prison. And he constructed a pipe bomb and detonated in the transit hub, which was people were injured, and the threat of loss to life. So he had zip ties. He wanted to take hostages. There was also another incident a very long time ago in which they wanted to bomb the Atlantic Terminal subway station, which is a major artery hub, and that was only thwarted at the last minute because one of the co-conspirators gave his fellow colleagues up. So it's always dangerous situation.
Yeah, and this is a developing situation, and we will keep monitoring it. Patricia Hurtado, thank you so much for being with us. And right now, just to give you a sense of what we're seeing in markets as we monitor this breaking news situation in a New York City that has been recovering from the pandemic. I think everyone is a little bit wary and frustrated after crisis, would like to move on. We are seeing in markets a bit of a pop after the inflation report came in a little bit weaker than expected on the core level. Coming up next, we'll bring any more details that we get. This is Bloomberg. bring you the latest headlines. We are hearing of multiple people injured after a shooting in a Sunset Park, Brooklyn subway station. We are hearing that there were several undetonated devices that the FDNY found in the subway station. They are continuing to investigate this. We are viewing images on the scene as a number of emergency responders do come and investigate what's going on. We also know that some of the subways, particularly the B, N, and D lines, are not running in Brooklyn. We're hearing that from the MTA. Time now for the Trading Diary, what you need to be watching this week. A host of Fed speakers with Brainerd and Barkin on deck today. President Biden speaking at 3:45 p.m. Eastern. JP Morgan reporting results on Wednesday. Goldman, Citi, and Morgan Stanley following on Thursday. And finally, an ECB rate decision rounding out a short week. We have those ECB officials starting to align the need of rates, dealing with some of the issues with respect to trying to combat inflation in an area where the economy isn't as hot as it is in the United States. Bloomberg's Michael McKee back with us for more. Mike.
Well, Lisa, let's take a quick look at what the issue is for the ECB. Obviously, it's inflation as it is for the Fed. Inflation at 7.5%, the headline number for the Eurozone, way above their 2% target. But it's also growth. There is a problem for the ECB with growth already, even before the war in Ukraine. And now that's raising a lot of questions. You can see the issue there with the Eurozone CPI going up and growth going down at the same time. And they have to figure out what's the war impact going to be. Does it push up on inflation even more as energy prices rise? And does it hit GDP? A lot of economists predicting a recession ahead for the Eurozone. Maybe not too bad, but they don't know. And then how long does the Russian war last? The longer it goes, the worse the outcome for Europe. So the question is, do they do something on Thursday, or do they just warn about it? The ECB has kept its rates unchanged throughout the pandemic, of course. The problem for them now is that markets are pulling rates higher because of all of this, especially the inflation concerns, Lisa. We're going to be watching to see if the ECB can thread a needle on Thursday.
Yeah, and I wonder from your perspective, having it just quickly, Mike, what statistic stuck out to you in the CPI report that really was the driving news about a half an hour ago?
Well, it's kind of funny because goods prices went down, but that was all because of used cars falling 3.2%. And services prices went up, but that was because airfares went up 10.7%. So neither of those are likely to be sticky. We don't know exactly what it means for the future, but it does suggest that maybe inflation is peaking for now.
Michael McKee, thank you so much, and for all the work this morning as you parse through the report. I just want to bring you the latest on that developing situation in Brooklyn. The New York Police Department is saying that no active explosive devices are currently at the 36th Street Brooklyn station, that is in Sunset Park, where this occurred. There were multiple people, just to remind you of what we do know, multiple people injured in a shooting, and we do know that they are working on trying to understand all of the details. We'll bring you more details as we find them. In the meantime, it does seem like they have stalled the subways in that region and definitely trying to get a handle of what's going on. Right now, in the markets, what you are seeing is a rally that has regained some steam. The NASDAQ up 1.8%, and you see the S&P up 1.2% following some declines overnight in Asia and in Europe. And meanwhile, in the bond market, you're seeing yields lower as core CPI came in less than expected, although really interesting to me to see that a lot of that had to do with car prices, not necessarily other aspects of core inflation. This was Countdown to the Open from New York. This is Bloomberg.
From New York, I'm Kaylee Lyons along with Guy Johnson in London. Welcome to Bloomberg Markets. Guy, we are continuing to follow a developing story right here in New York City. Sunset Park, Brooklyn, a subway station there, which we are seeing a live shot of now. There have been reports of multiple people injured inside that subway station. Several people were shot and wounded, also possibly an explosion. We understand from the latest headlines, Guy, that there is no active explosive devices at that 36th Street subway station in Brooklyn. We're now getting the U.S. Transportation Secretary Pete Buttigieg saying that the Department of Transportation is monitoring those Brooklyn shootings and ready to help. But of course, we're just taking the headlines as they come, Guy.
Absolutely, and out of an abundance of caution, of course, the transport authorities have put all of the lines that go through the 36th Street station on hold. So that is the D, the N, and the R line are now on hold. We will continue to monitor what the transportation situation is. But trying to get updates from a situation like this, trying to cover a situation like this, incredibly difficult, Kaylee. Obviously, we are watching the story develop and trying to understand what has happened, who has been affected, and the possible causes behind it, Kaylee.
Absolutely. Let's try to get some more clarity now on just exactly what our understanding is at this time. Shelley Banjo, Bloomberg's New York City Bureau Chief, is joining us now. Shelley, what are we learning?
So we actually have a reporter down at the scene there right now who said that, it's a lot of, kind of organized or unorganized chaos at the moment as people are trying to figure out what to do, get pedestrians and people away from the subway station, from the transit station. Currently, the NYPD and the FDNY, the fire department, and the police department are trying to figure out these two incidents, whether or not the shootings and the undetonated devices are related or not. They said that it's going to be at least an hour until there's some sort of press conference where they'll be able to tell us what's going on. Separately, the mayor of New York, Eric Adams, currently has COVID, is in isolation, so he cannot, or he is not physically going to be there, and so that's adding a little bit more of confusion into the mix this morning.
There have been incidents like this in London, Shelley, and the first question that always gets asked is this terrorism? Do we know anything in terms of the causes, potential motive for the attack?
There's no indication yet of anything like that. I mean, of course, the NYPD and FDNY are, very well trained on the terrorism issue, and that it's probably the first question that they're all going to ask. But there's no indication at all yet that we have that this is terrorism. With that said, the transit authorities are going to be looking up and down the New York City subway system to check all the other stations as well. You're starting to see already increased police presence at other subway stations, but we have nothing confirmed yet along those lines.
Well, and Shelley, just to put this into broader context, already before this morning's events, there had been an uptick, a substantial uptick in violent crime in New York City. How does this just exacerbate potentially the fear that is starting to develop around the transit system in particular?
That's right. This is possibly the worst thing that could happen to the transit system at the moment. While overall crime is down at decades lows for New York City, violent crime, transit crime, high-profile crime that you see headlines on is up, and it has been since the beginning of the pandemic, and has continued through the first few months of Mayor Adams's administration, even as he was elected specifically with the prime purpose of bringing down crime. And so this is something that is on everybody's minds, and is also something that matters more about the perception than just the reality as well.
Shelley, for our global audience, can you just give us some context here? Is this a busy station? Is it a busy hub? How does this fit into the overall transport network?
Sure. So this is very far away from the hub of, the Manhattan office district, the folks that, very far away from our Bloomberg headquarters right now where we're speaking. It's on the south side of Brooklyn, not far from a port terminal, not far, the southern end of Prospect Park. And so these are commuters. This is kind of white collar, blue collar workers that live in this neighborhood. These are folks, families who live in this neighborhood, probably head on to that subway station to get to work or to get to school. It's not a huge, heavy, busy thoroughfare. It's not like the Manhattan subway stations, but they're bustling. They're busy and they're typically packed.
Well, and Shelley, of course, as you said, this was during commuting hours, assuming people going back to the office, which is something New York has struggled with throughout this pandemic era the past 2 years, bringing people back into the city center, back into office instead of working from home. Where does the MTA stand right now in terms of resources, not just on the actual operation side, but then also putting more safety officials into these stations?
The subway system is still running at about 60%. They have not recovered from pre-pandemic. While more and more people are taking the subway and it feels packed, usually around commuting time, it's still not there yet. And precisely, crime is one of the biggest reasons why that you hear from people time and time again. I still don't feel safe to ride the subway system. To that end, both the mayor of New York, Adams, and also the governor of New York, Kathy Hochul, have been putting resources, adding police officers in those subway systems to not just combat the actual crime, but also to combat the perception of crime that is on the subway systems.
Shelley, we'll leave it there. I'm sure we'll be back to you a little later on in the program. Bloomberg's Shelley Banjo updating us on the latest. We'll continue to update you on any developments as they happen. As Shelley says, a chaotic scene at the moment. We may get some briefings within the next couple of hours. Of course, we will continue to keep you updated as to what we find out. Let's turn back now to our other major story that we've been following here at Bloomberg. That is today's CPI data. With us now to discuss the numbers, Christine Aquino, Bloomberg's EMEA markets editor, and Bloomberg's Mike McKee, our international economics and policy correspondent. Mike, let's talk about the numbers. What stands out? The core number came down. I'm sure the administration is going to focus on that. What other areas should we be looking at? Well, it depends on what your perspective is. From the point of view of the White House and the American public, the idea that we've got the fastest inflation at 8.5% since 1982 is going to be bad news. But within the details, there are some encouraging signs. The goods price inflation fell during the month, and that was largely due to used cars. Remember, that was one of those transitory factors that didn't actually hold up as transitory. It now seems to be going away, almost a 4% decline, and that pushed down goods prices. Services prices did rise, but much of that was airfares as people returned finally to flying now that the pandemic has started to recede. And so airfares are probably not going to keep going up throughout the year, which gives you the encouraging hope that maybe we have peaked now. Inflation's still going to be high for some months to come, maybe for some years, but it isn't going to be going up any further.
Okay, so maybe we have peaked. Christine, does that explain why equities are up and bond yields are down in the face of 8.5% headline inflation?
Absolutely, Kaylee. I think there was so much momentum into the move of higher yields that a number like this really did a lot to kind of stop it in its tracks because it was looking a little bit overdone here. But to the question of whether this reverses the entire inflation narrative and the Fed's potential response to it, I don't think we're even close to a peak in that sense. And, the Fed has been very emphatic about its plans for multiple rate hikes, potentially several 50 basis point rate hikes, and indeed their plans for the balance sheet as well. And one number today that kind of comes slightly under estimates probably isn't going to reverse that process.
Mike, let's pick up on that. Is this number going to have any effect on the Fed? Any effect on that May meeting? No effect on the May meeting. The Fed has pretty much telegraphed what it's going to do, a 50 basis point rise. Now, some people suggest maybe they count 25 of that coming from balance sheet reduction if they announce it. But the Fed is going to be raising interest rates probably by 50 basis points in May and maybe again in June. The question is what happens after that. And nobody really knows. The answer to that question may be in the Kremlin, depending on how long the war goes in Ukraine and how high energy prices stay. We've seen gasoline prices come down a little bit during this last month. If they continue to fall, we may see some relief in terms of overall inflation, and then people might start thinking the Fed will have to do less.
And Mike, of course, as you talk about the higher gasoline prices, things consumers are facing that, yes, have started to wane somewhat, they're still quite elevated. At what point do we start to have the conversation about broader demand destruction in the face of the higher prices consumers are facing? Does the kind of numbers we saw today indicate that may not fully take shape?
Well, one of the problems that you have is demand destruction usually comes about because of high prices, which then leads to lower prices. But in this case, we don't know what the impact is going to be definitively, because a lot of the excess pricing is things out of anyone's control other than maybe Vladimir Putin's. We're going to have problems with food throughout the year because of the fact that so much is being taken out of the market from Ukraine and Russia. We have the energy issues, and there are still the reopening issues out there, airfares being one of them. So it's kind of hard to know exactly how long this lasts and how long it goes, and whether or not Americans do pull back. They still have a lot of money in savings, according to the latest statistics from all of the federal transfer payments, so they could keep spending if they want to.
Just to update our audience, you are looking at a live shot coming from Sunset Park in Brooklyn. We will continue to update you as developments occur there and as we get more details as to what is happening. Christine, let's get back to the CPI question. Does today's data in any way give us an idea of where ultimately inflation is going to track back down to?
Well, Guy, I think it does give you clues a little bit into what was driving the move in prices over this whole time. I think there will be some relief over the fact that some of these prices that proved a little bit stickier in the last few months are starting to come down now. Certainly, that would be good news for consumers. But overall, I think, the impulse for the prices of goods and services still seems to be higher. And this is really what has gotten the Fed and indeed a lot of other policymakers globally going, is the fact that, there's a lot of momentum behind these prices and they are in danger or potentially already behind the curve. And this is something that they feel like they have to respond to.
All right, Bloomberg's Christine Aquino as well as Michael McKee, thank you both so much for joining us on this Inflation Day in America. Meanwhile, we are continuing to monitor that developing story involving multiple injuries at a subway station in Sunset Park, Brooklyn, 36th Street station. We understand that multiple people were shot and wounded this morning around 8:30 a.m. Eastern time. A possible explosion inside the station as well. The fire department of New York and the police department, the NYPD, are still on scene. An active investigation is ongoing. We will continue to bring you updates on this developing story as they cross. But of course, this is affecting the morning commute this morning. The D, N, and R lines disrupted inside Brooklyn and at some stations in Manhattan as well. This is Bloomberg.
You're looking at a live shot of a scene in Sunset Park, Brooklyn. Multiple people, we understand, have been injured inside the subway station there at Sunset Park, the 36th Street station. We will continue to keep you updated. This is an attack, we understand, that took place at roughly 8:30 a.m. this morning. A number of lines have been closed as a result of it. The DN and R lines are all closed, and we understand that there is an increased police presence in a number of stations in the New York area. As I say, we will continue to keep you updated as we get more information as this scene develops in Brooklyn. Let's get back and talk a little bit more about the data that we've been paying so much attention to today as well. The CPI data out of the United States coming through. The headline number 8.5%, the core number 6.5% year on year. That core number a little bit better than maybe some people had anticipated, and certainly a little bit of good news maybe for the administration. What is surprising maybe, given the extensive, the print that we've seen today and the records that are being set, this is the highest number since 1981, is that stocks are up and actually bonds are catching a bid, i.e. yields are lower. Megan Horniman, Director of Portfolio Strategy at Verdence Capital, joining us now to give us her sense of what is happening here. Do you think we're getting near to the peak of inflation? And if so, what does that mean for investors?
Yeah, I think we're closer to the peak than we are. I think the next few months are still going to be a bit dicey. I don't want to take 1 month and consider that a trend. I'd like to see this go on over several months where you're truly seeing that those goods priced inflation come down. That's something that the Fed referenced last year, and I think something that you'll see some pretty substantial improvements in the second half of this year. I don't think it really changes the Federal Reserve's opinion and what they're going to do. They're going to need to be aggressive over the next coming meetings. 50 basis point rate hikes, and then balance sheet, addressing the balance sheet as well.
Well, and obviously the market is already anticipating aggressive action from the Federal Reserve. Do you think we've reached peak pricing of hawkishness, Megan?
I think that in certain areas of the bond market you have, and I also think in select areas of the U.S. equity market, your small and mid-cap space, these areas have been significantly underperforming the large cap space as well, the year to date and over the past year. These areas I do think have really priced in the worst case scenario, and I think certain areas of the bond market might be pricing that in. We're not ready to jump into anything in the bond market yet, though, because there still is a lot of volatility around what may happen over the coming months. We also, again, this will take 1 month and we'll be happy about that core number coming down, but let's see if this continues more on a trend before we would suggest anything in the bond market. You got to be defensive here in bonds. We still do think the Fed's going to have to be aggressive in the coming meetings.
We had the Bank of America Fund Managers Survey out overnight. Always an interesting read to get a sense of where we are. Certainly fund managers turning significantly more cautious. A line that really stands out from Michael Harnett, who wrote the note, the disconnect between global growth and equity allocation remains staggering. What do you make of where we are in terms of equity markets right now? What do you think of valuations?
So I think there's still certain areas of our market that are overvalued. I think that you're going to find that for some time as we start to wean out and figuring out where we are from an inflation and interest rate environment. So I still do think you're going to find volatility continue, and especially those expensive high PE types of stocks. But there are other areas of the market that have been made completely unloved. So it is a good time, I think, to take a look at some of those. Remember that we think economic growth can still withstand this aggressive Fed tightening cycle. There's still many factors under the underlying fundamentals of the economy that are strong. In that event, you want to own equities over bonds. And when you're looking at the return expectations for bonds, global equities are where to be. And in that instance, you got to look at what's been the most unloved right now.
All right, so maybe Tina is still the name of the game. Megan, let's go to earnings season, which of course kicks off in earnest with JP Morgan tomorrow. What are your expectations in terms of margin retention at the very least, if not expansion?
I think that the companies have proven that they're able to pass on some of these higher input costs. So I think margins can stay pretty stable here. It's going to be the second half of this year when we start to look at the potential for some margin contraction. That's because I don't know how much longer with the high food and energy prices, and you're seeing some of the demand destruction already with volatile retail sales numbers, that they'll be able to pass that on to consumers.
So where are we in the cycle, Megan? we're probably late cycle, but how late cycle? How much more has this cycle got to run?
I still think there's plenty of room for this cycle to run. And we look at a lot of different recession indicators, and there's not many of them right now that are really screaming to us. I mean, a lot of people referenced the yield curve last week and the week before, and that quickly corrected itself. And now we have a positive yield curve. We have deeply negative real interest rates. We have a very improving labor market. These things, I think, are good for the economic cycle to continue. I think we're in the midst of this pivot from the Fed, and what the Fed needs to do to slow down the pace that we came out of the recession, out of the pandemic. Remember, we saw the fastest recovery in economic growth than we've ever seen in history. The Fed needs to slow that down. So I still think there's plenty of room for this cycle to run.
All right, Megan Horniman, we have to leave it there. CIO at Verdant Capital Partner Advisors, thank you so much for joining us. And of course, we continue to monitor the scene in Sunset Park, Brooklyn, after a shooting of multiple people at a subway station, the 36th Street station there. It is an active investigation ongoing. We are seeing live pictures of that now. The NYPD, the police department, as well as the fire department is, of course, there. We understand also that there may have been an explosion. However, there are no active explosive devices at the site at this time, according to the authorities who are there at the station. We will continue to monitor the situation, provide updates as they come, as this is disrupting transit in New York City today. The D, N, and R lines disrupted in Brooklyn and in parts of Manhattan as well. So stay with us for further updates. This is Bloomberg. Investigators from the New York Police Department and New York Fire Department on the scene in Sunset Park, Brooklyn, where the 36th Street subway station witnessed multiple shootings of commuters earlier on, about 8:30 a.m. this morning. We understand that multiple people were shot. There was also a potential explosion, though investigators have found no active explosive devices at this time at the scene of that station. We continue to monitor for updates, and let's get the reaction now from Washington, D.C. Bloomberg's Anne-Marie Hordern is joining us from Washington. Anne-Marie, what have we heard from lawmakers in the district as well as from the administration?
So we haven't yet heard from the White House. We have heard from Transportation Secretary Pete Buttigieg taking to Twitter, and he said that they're closely monitoring the developments after this morning's shocking news from Brooklyn. He also says that his thoughts, of course, with all of those affected, and that they are ready to help the MTA and the people of New York in any way they can. And then we heard from the 16th congressional representative of New York, Jamal Bowman, saying that he'd like to live in a world where shootings on subways and schools and our streets would be considered unfathomable. And it's interesting because this comes just a day after the president held an event talking about gun violence. He was talking about ghost guns and how they want to move along and go after these ghost guns, these guns that you can just create on your own at home. And the administration has come under a lot of pressure for the amount of gun violence there has been given the under the COVID pandemic.
So we're just getting to some information coming from the White House. Let me update everybody on what we're learning. The White House says that it is in contact with the New York mayor on the subway shootings. You are looking at a live shot coming from Brooklyn. We understand that the president has been briefed on the New York City subway shooting. That's all we have at the moment. Anne-Marie, in terms of what this is likely to do to that policy of maybe leaning harder in on the gun crime issue, will this change the way that he approaches it? This is obviously something that is going to garner an awful lot of headlines. How much support can the president generate in terms of getting some policies enacted in the near term to maybe lean in on this problem?
Well, we should say two things. One, there's a lot we still need to know about what exactly happened at this subway station in Brooklyn. But two, every time there has been some of these very devastating gun violent attacks in America, that has always prompted legislators, officials to come out and really push for more to be done. The issue is it always then comes back to legislation in Congress, and that is, of course, where it gets tricky because you really have a big partisan divide.
Bloomberg's Anne-Marie Hordern joining us from Washington. Thank you very much indeed. We continue to monitor the scene in Brooklyn. We will continue to keep you updated on all developments. This is Bloomberg.
These two trucks trying to get out also, so
This is Bloomberg.
You are looking at a live shot of the scene in Sunset Park, Brooklyn, where multiple people were injured inside the 36th Street subway station in that neighborhood. We understand that the New York Police Department, the Fire Department of New York, the Bureau of Alcohol, Tobacco, and Firearms and Explosives are on the scene. The FBI also is now responding after several people were shot and wounded as numerous undetonated devices were discovered inside that subway station. Let's go back to Shelley Banjo, Bloomberg's New York City Bureau Chief, who is joining us now. Shelley, what else are we learning about 2 hours after the first reports of this incident have come out?
Unfortunately, there's still a lot of unanswered questions about what's going on right now. We are learning a little bit more about the identity of a suspect that they have been looking into, but in general, we're still waiting for the NYPD, the Fire Department of New York, the mayor's office to all kind of come and tell us what they know so far. We do know that the subway, the transit system is, not just focusing on that station, but also citywide, and to make sure add police presence, make sure nothing else is going on around the transit system. But we're still waiting for any kind of confirmation that any of the shootings that happened at the subway station and the undetonated devices are linked. There's no active devices that the NYPD was able to find, and so from that perspective, it is a quiet scene from that perspective, but there is a mob of people out at that subway station outside in Brooklyn to try to figure out what's happening.
Can you just give us some context here, Shelley? How big a station is this? How many people would normally be going through it? I'm just trying to get a sense of the scale of what is happening underground right now. We can obviously see the scenes above ground, but below ground, what are we looking at here?
Sure. So we have millions of people who are riding the New York City subway station every day. It's the busiest transit system in the city. Although this wasn't a huge hub like the Times Square station, or where Bloomberg's headquarters are in Midtown East. This is a busy morning commute area for this area, Sunset Park in Brooklyn. And so these are folks who are getting on the train to go to school, to go to work. They're packed trains. You're kind of standing shoulder to shoulder. Even right now, that the subway system is running at about 60% capacity during those rush hour morning times and evening commutes. You're still standing kind of shoulder to shoulder with packed subway trains and packed subway stations.
Shelley, thank you very much indeed for continuing to keep us updated. Bloomberg's Shelley Banjo. We will continue to keep you updated on any developments as they happen. We understand that the president has been briefed and is in contact with the mayor. Let's join now Jared Bernstein of the White House Council of Economic Advisors. Jared, you're a New Yorker. We understand the president has been briefed. Is there a message from the White House?
Well, thank you for bringing your viewers up to speed on this. The president has been briefed on the latest developments. Our White House senior staff is in touch with the mayor and the NYPD, and the goal there is, of course, to see if we can provide any assistance. At this point, that is the understanding of that's the readout I have. Obviously, our hearts are with the people of New York. We're gathering facts and certainly don't want to get ahead of the situation beyond that.
Jared, let's turn to the other story that we're covering here at Bloomberg today, and that is today's CPI number. The headline figure, 8.5% year on year, the core number 6.5%. Is this the peak of inflation? Does it come down for the American public from here?
Well, to think about that question, let's drill down under the hood, as I know we like to do here at Bloomberg. 1.2% is the monthly rate, which helps us get a bit more granular insight into what's going on month to month. A full 70% of that increase is due to energy costs. 63% of that increase is due to gas alone. In other words, this is a CPI print very much with the fingerprints of Putin's unprovoked invasion of Ukraine and its impact on commodity prices. I think what's very important for viewers to understand here is that this president is dispatching his team to do everything we can to help ease energy price pressures, most notably, of course, a very aggressive, historically significant release of barrels of oil from the Strategic Reserve, and not just here, but in coordination with many of our allies.
Well, and of course, we're also expecting the president, Mr. Bernstein, to take action on the amount of ethanol that can be used in gasoline as well. Expected to announce that when he travels to Iowa later today. So a tapping of the SPR and encouraging of OPEC Plus to pump more oil, shale players to pump more oil as well. This action on ethanol. Is the administration reaching the limit of what it is able to do to rein in inflation?
Well, everything is on the table, and I'm glad you brought up the ethanol 15 announcement coming later today. This is something that, according to, I think, pretty widespread analysis, could reduce the price at the pump in stations that sell E15 by about 10 cents a gallon. We also know that upon the release of the SPRO barrels, Strategic Reserve barrels, that the price of oil has come down about 10%, and we've seen about an 11 cent per gallon decline in retail gas prices at the pump. Now, I want to be clear. This remains a global price, as same with food. These are global commodities. So I'm not saying that the release or the E15 announcement are the only factors going on, but they're certainly helping to push in the right direction to ease pressures on the American people.
Jared, history doesn't have a particularly good track record of showing that trying to control prices works. Is the White House trying to control prices here? And what do you think your chances of success are?
Yeah, that's a totally fair question. No, we are not trying to control prices. What we're trying to do, and you can see this in so many of our different policy agenda items, whether it's near, medium, or long term, is to bring up the economy's supply to better align with the economy's demand. This inflation that we've been going through is very simply, and I think clearly understood, as extremely strong demand, both in labor and product markets, hitting inadequate supply. So whether you're looking at the president's agenda to reduce the cost of prescription drugs, to reduce the cost of child or elder care, if you're looking at the release from the SPRO or the E15 announcement today, in every case, we're doing all that we can to better realign supply and demand. And by the way, from my perspective, and as a macroeconomist who's been tracking these developments for more decades than I want to share with you right now, one of the key variables here is labor supply. And there we really have seen some quite positive movements that I think have been underreported. In fact, the labor force participation rate, whether you look at it overall or for prime age workers, is growing faster in this expansion than any of the past 5 expansions. Key variable to help hasten that realignment.
Well, when we're talking about the realignment of supply and demand, the administration has time and again pointed to the Federal Reserve and its role in reining in demand through the mechanism of interest rate hikes, through the mechanism of quantitative tightening. Is the administration happy to see potentially a higher unemployment rate, potentially slower growth, if not an outright recession, if it does indeed bring down inflation pressure and higher prices that the American people are facing?
I mean, we've been touting just how low the unemployment rate is and how at 3.6% we're a tick above where we were pre-pandemic, and how quickly we've gotten here thanks in part to the American Rescue Plan, which by putting checks in pockets and shots in arms has helped us get to this very tight labor market. So that's something that we consider an absolutely invaluable asset to working Americans. Now, if you look at forecasts, not just ours, take Goldman Sachs. I follow their forecast pretty closely. They've penciled in all the rate hikes, and they have the unemployment rate, I believe, at 3.5 or 3.6 at the end of the year. So the soft landing scenario is one wherein labor demand stays strong, unemployment stays low, and inflation comes down. Now, that is but one of numerous scenarios, but that is the soft landing scenario.
Yeah, they've still got inflation pretty elevated at the year end. Jared Bernstein, where do you think inflation is going to ultimately settle here? Would the White House be comfortable with an above 2% inflation rate? Do you think the American people would be comfortable with an above 2% inflation rate?
Great question. So first of all, let's talk about the forecast for a second, because you're right. Forecasts that used to have inflation ending the year in the 2 to 3 range now have inflation in the 3 to 4, 4.5 range in many cases. I think the key perspective from the American people is less what's the actual percentage increase year to year, quarter to quarter, month to month, and are they getting some easement at the pump, in the grocery store, when they go out to the restaurants, services, goods, and every single forecast I've seen does show inflation letting up some towards the end of the year. Not to the level that we need to see it, and we will not relax until these price pressures ease and American households don't have to worry about inflation going forward. But the fact that this isn't just the first derivative story, it's the second derivative story. We have to see the pace at which inflation is rising. That should be decelerating by the end of the year, according to these forecasts, and I believe that will be a positive development should it materialize. We can't sit here and hope that that happens. We have to do everything we can to make sure it happens.
Well, and Jared, of course, the price pressures domestically are also influenced by what is happening outside of the country's borders. You've alluded to the impacts that the war in Ukraine has had. How much more economic pain, economic ramifications is the United States, the Biden administration, willing to face in order to retaliate against Russia? How much further can you take it?
Well, the president has consistently framed this as doing everything that we can to insulate the American public as best we can from the impact of the sanctioning and the self-sanctioning. But he's also been extremely forthright about how that can't be completely accomplished and that there will be commodity price issues that people are facing. And by the way, today's CPI is a perfect example of that. But I think you also have to weigh that against how much action we are taking. I have never been part of a White House that has tried to do more to help on the economy supply side. Getting goods from ship to shelf, our efforts in the ports, our efforts in trucking to help move goods around the country more efficiently. We talked about the release from the SPRO. And then there's the longer-term agenda to help lower costs that families face, pressures on family budgets like child care, elder care, cost of education, cost of health care. All of these are parts of our agenda, and we will continue to work relentlessly on them until we see this challenge mitigate for American households.
Do you think American households, though, are going to be paying higher energy bills because some of that energy ultimately is going to help Europe weather this storm? Do you think the American people will be okay with that? Because certainly we're seeing significantly more cargoes starting to cross the Atlantic. I see the gas prices at the Henry Hub starting to go up pretty sharply right now. Jared Bernstein, do you think the American people are going to be okay with that?
Well, the American people have been clear in polling that they very much support our initiatives to help do everything we can to undermine resource flow to President Putin, who has committed alleged war crimes and who is prosecuting an unprovoked war at tremendous, tremendous cost to the globe. And I'm not even thinking about economics right now. I'm thinking about the human cost. So the American people understand the importance of unifying with our allies against this unprovoked aggression. At the same time, again, I want to come back to some of the measures that the president is taking. We talked about the SPRO release. If you follow this, you know that the president's talking about 1 million barrels a day for 6 months. That's 180 million barrels of oil. And that is and will continue to make a difference in the price of oil and retail gas at the pump. What people might not know is that through our consultation with our partners who also have strategic reserves, that 180 is now up to 240 million barrels of oil. And that's the kind of unity that this president is helping to bring to the table, and it's directly targeted at helping ease price pressures faced by working Americans.
All right, we have to leave it there, but thank you so very much for your time today. Jared Bernstein, member of the White House Council of Economic Advisors. Meanwhile, we continue to monitor the situation at the 36th Street subway station in Sunset Park in Brooklyn, right here in New York City, where we understand multiple people were shot and several explosive devices were found. No active explosive devices, though, have been found at the scene, according to the investigators that are there. We're now hearing from the Department of Education. All public schools near that Brooklyn shooting are in a shelter-in-place scenario, which requires students to remain inside the building. And of course, this is also affecting the morning commute for the DNR trains that run in Brooklyn and in some parts of Manhattan. As Jared Bernstein just told us, we understand that the president is aware and that the White House is offering any assistance needed to Mayor Adams and the police commissioner here in New York City. Stay with us for continued updates on this developing situation. This is Bloomberg. We continue to monitor the scene in Sunset Park, Brooklyn. You are looking now at a live shot outside the 36th Street subway station, where we understand multiple people were shot and wounded earlier this morning around 8:30 a.m. New York time. We continue to monitor the developments there, and we'll bring you news as we get it. Meanwhile, we continue to focus on the markets as well, and we'll start to find out how Wall Street's biggest banks did in the first quarter tomorrow when JP Morgan kicks things off. That'll be followed by Goldman Sachs, Morgan Stanley, Citi, and Wells Fargo on Thursday. Let's bring in Betsy Graseck, Morgan Stanley Global Head of Banks and Diversified Finance Research, for more. Betsy, let's just set the scene of where we are going into these reports. Since JP Morgan reported prior quarter's results in January, the KBW Bank Index is down 19%. We are heading into earnings from a very beat-up place for some of these financials. Will the reports we get this quarter help them or hurt them?
Well, it'll depend on who we're talking about. I do have to say I am in line the group. I'm basically equal weight. We were overweight in January, so we did bring down a recommendation on the group. And really it's a function of the headwinds and tailwinds that are really coming at them fast and furious. I would say there's a possibility for a relief rally in certain names if we get a positive surprise, particularly in trading. On the other hand, we do have an outlook here for an expectation that credit should be deteriorating as inflation is running so hot right now, as you know. And that messaging, we think, is not in the stocks or in most of the estimates.
Okay, Betsy, let's separate the pack, winners and losers.
You know, as we see it, the two stocks in particular that we are long going into the quarter, Wells Fargo and American Express, very different stocks. But we say that because Wells Fargo is the most rate sensitive we cover, and it has significant amount of opportunity for expenses to come down, and it also has some nice opportunity for buybacks to stay high. So there's a multiple ways to win. Now, the other big stock in our coverage where we're equal weight is Bank of America. They are also very asset sensitive, very rate sensitive. American Express is a slightly different story. You're still benefiting from T&E rebounding, and their credit loss outlook is really, really good.
All right, Betsy, you talk about the rate sensitivity. Obviously, higher rates in theory will help banks when it comes to net interest income. So the consumer-facing banks, those that lend a lot, maybe more so. What about the more investment banking focuses, the likes of Goldman Sachs, of Morgan Stanley? How large are the headwinds facing those banks as we see volatility coming in and potentially a decline in capital markets activity as well?
So I can speak to Goldman, obviously not Morgan Stanley since I worked there. You know, around Goldman Sachs or JPM, B of A, Citi, the investment banks that we cover, you know, look, there's a couple of things going on. One, investment banking revenues down a lot year on year due to extraordinarily low levels in IPOs, as you know, and also high yield issuance has really pulled back quite meaningfully in the quarter. I think that's well known. We all follow the data. I think that's very expected by the street. Trading is the other big piece here, where on the equity side, again, expect a pullback. Fixed income also, I'm currently estimating about a 15% decline year on year in trading across the group. This is where, look, we could be surprised. Why do I say that? Yep. Because fixed income, the volatility and the volume are so high, could it end up giving us a positive surprise that we're not looking for?
Yeah, you just talk to people anecdotally. Such a mixed message coming out of some of these trading desks and what is going on there. Talk to us about what's going to happen, A, with provisioning and B, with buybacks.
So on the provisioning side, we have slightly higher levels of provisioning than consensus does. Part of the reason for that is in you know, running our numbers ahead of the quarter, I'm thinking, all right, look, we've got, at that point, we had a slight inversion in the curve. We've got the war going on. We've got inflation high. To me, the bear case has to be rising. So I would think that management teams are going to have a slightly more conservative outlook on credit, which is why we brought up our provision numbers. I've also gotten some questions on how Russia plays into that, because companies with Russia exposure will need to take a mark-to-market of sorts for the impact there. I don't think that'll come through provision line. I think it'll come through other expenses. But needless to say, Russia will also, the exit from Russia, I should say, will also drive some impact in earnings.
Betsy, always great to talk to you on the eve of such an important event, the start of the bank reporting season. Always appreciate your time. Thank you so much. It's going to be a busy few days for Betsy Graseck and the rest of the team. Betsy Graseck, Morgan Stanley, Global Head of Banks and Diversified Finance Research. Thank you very much indeed. We continue to monitor the situation in Brooklyn. We'll continue to bring you updates as we get them. This is Bloomberg.
Setting us up to give us the latest details on what happens here, but I'm going to have my
The investigation continues in Sunset Park, Brooklyn, after multiple people were injured inside the 36th Street subway station in that neighborhood. We continue to monitor the developments. We understand now public school students in the area are in shelter in place, required to remain inside buildings, while transportation on the D, N, and R subway lines has been disrupted here in New York. Guy, we understand that there are no active explosive devices on the scene at the moment, so it probably is a calmer scene inside the subway, but we still are looking for answers as to what exactly went on this morning. Guy.
Absolutely. We understand that the president has been briefed. He is in contact with the governor and the mayor. We are at some point, I suspect, going to get a briefing. When that happens, we will update you on the details of that briefing and bring it to you live. We don't know when it's going to be, possibly in the next hour. This is Bloomberg.
About that all day yesterday.
Tuesday the 12th, European equities are lower, but US equities and US bonds plus European bonds all catching a bid following that CPI data out of the United States. The countdown to the close here in Europe starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Quick update on the price action here in Europe as we count you down to the close of the equity session. Equities on offer were down by around 0.5%. In the US, equities a bid post that CPI data. But on both sides of the Atlantic, the bond market is catching a bid as well, particularly here in Europe on the periphery, which is interesting. So the Italian 5-year now trading 1.669. As you can see, we've got yields moving lower, prices moving higher, really quite significantly. And Brent crude on the move as well. We're going to hear from the president a little bit later on, talking about the ethanol standards over in the United States. We heard from Jared Bernstein a little bit earlier from the White House, indicating that the White House is not trying to control prices of energy. But certainly, we are seeing a lot of energy volatility right now. Brent crude today, Kaylee, up by 6.4%.
Yeah, of course, Guy, the White House trying to do something to help rein in inflation, which was at 8.5% in the month of March, at least on the headline level. The market, though, seems to be gripping closely to the 0.3% gain in the core month on month, which was lower than expected. That has sent risk assets higher, though we are off of session highs. Right now, the tech-heavy NASDAQ 100 is higher by just about 0.8%. But in the bond market, we are bid, as you say, Guy, down about 7 basis points on the U.S. 10-year yield. Right around 170 is where we sit. It was north of, 270. It was north of 280 earlier on today, while the dollar is weaker after an 8-day winning streak in oil, back north of $100 a barrel on WTI as well. As we watch the markets, though, we continue to watch the scene in Sunset Park, Brooklyn, after multiple people were injured inside at the 36th Street subway station. Investigators are still on the scene. We understand that they have secured the area, but are asking New Yorkers to avoid it for the time being. Let's get to Shelley Banjo, Bloomberg's New York City bureau chief, for more. Shelley, what are we learning at this time?
So what we're learning right now is that the NYPD is starting to ask more people to kind of stay in place. They've asked the schools around the area to shelter in place, not leave. And they've also sent out an alert, a mobile alert to people, widening the scope of the area and asking people to avoid that area completely. So we don't have any more information on what happened or whether or not these two things are related, the shootings, the multiple shootings and the undetonated devices that were found, but we do know that the police are continuing to investigate and widening their search on that front. They did release some details on a potential suspect that they're looking for. They're not saying that this is necessarily a shooter suspect, but rather just a person of interest, saying it was a man, 180 pounds, wearing an orange vest and a gas mask. And so that's one person of interest that they've identified, and they're looking. We're still waiting for any kind of briefing from the police department, from the fire department, from the mayor's office. We're still kind of waiting on any kind of official word. All we know is that they have been in touch with D.C. and that Washington has offered to help, but we have no word on whether or not this is a wider event, if there's any sort of terrorism involved or anything like that.
Well, okay, to that point, do we know whether this is just an isolated incident at this point? You were bringing us information earlier on that we are seeing security being stepped up across the city. What can you tell us about that?
I think that's the question that's most important and mostly on everybody's minds. Is this a one-off isolated incident that's part of an ongoing wave of violent crime right now in the city, or is this a return to some of the more worrying terrorism or even domestic terrorism that we haven't seen in a number of years during the pandemic here in New York?
And Shelley, I keep monitoring Eric Adams, the mayor of New York City's Twitter feed. He's still just retweeting tweets from the White House press secretary, from the New York City Police Department. We haven't heard from the man himself to this point, and he is in COVID isolation. How does this complicate the messaging to New Yorkers around the events of today?
It's particularly unique for this mayor because in the first 100 days that Eric Adams has been in office, he has trekked up and around New York City, all of its 5 boroughs, every time there is any kind of shooting or or any kind of crime event to really focus on it and to show New Yorkers, I'm here, I'm looking, and I'm watching out for you.
Yep.
He has COVID right now, so he's in isolation and he can't physically leave that right now.
Do we know who's leading, therefore, the city's response to this? If we do get a briefing later on, I would understand that Governor Hochul will probably be involved. Who else could potentially be updating us?
The governor has certainly been involved, and I think that Adams is still leading this charge on this. But in terms of a briefing, that's likely to come from the New York Police Department or the Fire Department, or both.
Shelley, as soon as that briefing happens, we will bring it to you. We understand they might be setting up for such a briefing. We don't know exactly when that will be happening, but when it does happen, of course, we will bring it to you live. Bloomberg's Shelley Banjo, thank you very much indeed. As I say, we will continue to keep you updated on the developments as they happen. The other big story, of course, out of the United States that we have been covering so closely here at Bloomberg today is the latest inflation numbers out of the US. Consumer prices rose in March by the most since late 1981. March CPI, 8.5%. That's the year-on-year figure as well. Graham Secker, Morgan Stanley Chief European Equity Strategist, joins us now. Graham, let's talk a little bit about the transatlantic divide that currently exists between the United States and the data that they are witnessing there and what we're witnessing here in Europe. We have the ECB coming up later on this week. Of course, the Fed is going to be monitoring the data stateside, but the ECB is going to be having to be watching very closely both events. Can you talk to us a little bit about how this sort of transatlantic inflation story and how it develops on either side is shaping your thinking about where people should be putting their money? US equities, European equities?
Yeah, of course. So in the US, we have high inflation, but we have high growth with it. And that is allowing the Fed sort of free rein, if you like, to raise interest rates. The backdrop in Europe is more problematic because we have elevated inflation. Inflation in Europe, in parts of Europe, is also close to 40-year highs. But we have these question marks about the growth outlook predominantly because of the conflict. So that's making the ECB's job much harder. So in the US, you have high inflation but very high nominal growth. In Europe, you have high inflation, but your growth outlook is starting to deteriorate. So your nominal growth, while it's still quite good, equities really care about the real growth outlook. And that is more problematic there. So the ECB's got this tricky job because they've got to focus on keeping inflation under control, but they're also getting worried about a potential growth slowdown. And we've seen consumer sentiment in Europe fall materially over the course of the last month or so. So far, the PMIs have held up pretty well. But my fear is that they're going to join the consumer confidence data in taking a bit of a tumble down. So we're quite cautious on European equities right now. Just stagflation is just a very tricky backdrop for investors.
Okay, let's talk about that caution. Mike Wilson, who we speak to on a regular basis, good friend of this program, is described often as a bear. Mike covers US equities. You cover European equities. If he's a bear, what does that make you?
Well, we're also quite cautious at the moment. I would say we were very positive on European equities for all of last year, and to be honest, up until the invasion. But for us, that event has proved to be something of a game changer for the outlook for European equities. Previously, we had an environment of high inflation but good growth and an ECB that would probably not have to do too much. But now, post the events of the last couple of months, we have got this more problematic backdrop. So we've had to react to the situation on the ground and get more cautious. So if I look out over the course of the next 12 months, in our base case framework, we have no upside for European equities. And in the short term, we think they'll probably go lower rather than higher. And if you like, our sort of skew around our flat returns skews more to the downside rather than the upside. So maybe I'm not as much of a vocal bear as Mike is, but we are still, we still think it's going to be pretty tricky in the short term for European equities.
Well, Graham, one of the warnings that Mike Wilson has consistently repeated is on the margin side of higher wage pressures, higher input costs, putting pressure on companies' bottom lines. How is your feeling on European companies and their ability to exercise pricing power or their lack of ability to do so?
Yeah, so again, going into this year, at one point we were looking at a scenario where real GDP growth was going to be above inflation. And that led us to the conclusion that margins in Europe would actually be okay. The labor market is not as hot in Europe as it is in the US. So whereas US companies are dealing with pretty rampant wage inflation and that puts pressure on margins, the outlook in Europe was looking like it was going to be different. The problem now, of course, is, as I mentioned before, the growth outlook's deteriorating, the inflation outlook has come up. So we also have margin pressures, but not so much from wages, but rather from input costs and energy costs and that kind of thing. So in a recent note we published, we changed our view from margins basically being stable at a pretty high level this year to actually now forecasting margin contraction. If you look at some of these economic data points, sort of output price inflation versus input price inflation, again, you're at a record low in Europe now. So these companies are dealing with sort of record high input prices, much higher than they can get in terms of the output prices. So that does signal margin pressures in the system. One of the things that we look at, without getting too geeky on the data, is how analysts are changing their earnings estimates versus their sales estimates. At the moment, the sales estimates are still quite good. We're still seeing net upgrades at the moment, which is another topic for discussion. Earnings revisions have tipped negative, but if you look at the gap between the two as a guide to what analysts are thinking around margins, you're down at a 15 to 20-year low. So we do think there's quite a lot of earnings risk out there for Europe over the course of the next couple of quarters. And bizarrely, analysts have been raising their earnings estimates over the last 3 months in Europe, whereas ultimately we think they're now going to have to start cutting them back again.
Yeah, I guess the top line makes sense. It's the bottom line is where the question lies. Graham, final question. We're trading 108.70 on euro dollar right now. There is an expectation that the interest rate differential is going to widen from Europe to the United States, and some are expecting that number to go significantly lower. What are you plugging in for euro dollar? And if it does go significantly lower, how does that change the picture for European equities?
Yeah, look, Europe is a very sensitive region to changes in FX because we have all of this international exposure, so sales exposure to the corporates themselves. So the way we think about this is every 10% move in the currency can boost earnings or hurt earnings by 4 or 5 percentage points. So actually, one of the things that's actually supporting the outlook for European earnings a bit is this currency weakness. So we have been, our FX team have been a little bit surprised by how low the euro has gone. But again, we've had this change in circumstance. So at the moment, this is definitely what I would call a mild tailwind for the earnings outlook. So we have some growth problems emerging, but thankfully the FX backdrop is actually providing a little bit of support, and that will continue, I would argue, for the next quarter or so. This time last year, euro dollar was over 120. So we've got quite a healthy support from FX translation for the next quarter.
All right, Graham, have to leave it there, but thank you so much for joining us today. That's Graham Secker of Morgan Stanley. Meanwhile, we continue to watch the pictures coming out of Sunset Park, Brooklyn, after an incident at the 36th Street subway station this morning, where we understand multiple people were shot and wounded. A suspect is now being sought, but the New York City Police Department is asking New Yorkers to avoid the area of 3rd Avenue to 5th Avenue from 20th to 40th Street in Brooklyn. The D, N, and R subway lines have had their services disrupted due to this incident. We understand emergency personnel are on the scene. An investigation is ongoing. We will continue to bring you updates as we get them. This is Bloomberg.